Hi, this is Tom Sedlak, General Manager at 33rd Company Property Management. Thanks so much for listening to our podcast. Today's topic is proper financial controls for homeowner associations. And that sounds like a mouthful there, but what it really means is your HOA agent really properly managing the funds in your homeowners association accounts. Typically, HOAs, homeowners associations, are going to have two accounts, an operating and a reserve account, and you need to have faith that your management company is following proper financial security procedures, cash handling procedures, and preventing fraud from occurring. It's not surprising that every so often you hear about a property manager running off with hundreds of thousands of dollars of the homeowners association's reserve accounts, and sometimes that spans across different HOAs. Really, it's a sad story when you hear that, but it can all be controlled with a company that uses proper trust accounting controls and proper follow-through. And that's what we're going to talk about today. Some of the highlights of what a company can do to prevent fraud, to prevent misappropriation of funds or other criminal activity, the funds that they have, is to first and foremost open proper custodial trust accounts. Find a local bank that is chartered in the state that the HOA is located, and that's important. You want to make sure that they have a charter, that there is an actual office, and they're not just using a bank that's out of state and not even licensed to do business in that state. When it comes to opening savings and checking accounts, the reserve account should be a savings account. You don't want to have a checking account where checks or transfers can be initiated from that account. The way we manage reserve accounts is that there are no transactions to the reserve account except by and between the operating and the reserve account. So it's a one-way conduit that can go either from operating to reserve or back through that same conduit, reserve back to operating, but no external checks are written. There's no external ACH transfers or any other types of transfers in and out of the reserve savings. It's solely going to go back and forth between the operating checking account. The reason that's important is because when you audit those two accounts and you do what's called a monthly reconciliation report and you reconcile the balances, the outstanding checks, the outstanding transfers against the software, you should have a perfect balance between the bank account and the operating account software, and likewise the bank account and the reserve savings statement. And when you do have that reconciliation, and we actually provide those to our HOA board members, but now you're actually auditing each reconciliation report is also auditing not only of itself but also the opposite account, because all the transfers are made between the two accounts. And that way you can flag and find fraud just through an operating checking account audit that might be going on in a reserve savings account if you're not getting the proper transfer reconciliations and they don't bounce off the reserve savings total. Check handling duties and cash handling duties, they need to be divided amongst several people. You don't want employees that print checks and then can also sign them. So you want to make sure that anybody that can print checks cannot be a signatory on checks, and vice versa. So you don't have a signer that can also go in and print checks. And then officer and director that signs within that company, should not be able to necessarily print checks if they're the signatory. So it works all the way up the chain from the employees up to the officers and directors of the company. As far as involvement with HOA board members, that's another thing that some boards do, is they require that they are there are two signatures on a check, and some HOA boards require that one of the officers of the HOA has to sign a check and one of the officers at the managing agent's office also have to sign. And that's another two-way fraud protection ability. Viewing access to the bank accounts, that's another important thing. It's just surprising to us that more HOAs, boards of directors, don't have view access at least of the operating and reserve bank accounts. You don't want necessarily the boards to have check writing privileges without the agent, because that also is an opportunity for fraud, having a rogue board member or even a past board member that still has account access. But for the current board members, you want to make sure that they at least have view account access of the bank accounts, and that helps you flag potentially unauthorized transactions early so that they can be reversed and you fix any issues. Bank lockbox processing of incoming checks, that's an important attribute. If your HOA is still predominantly a bunch of check writers, you want to make sure that they're secure. And whether that involves a lockbox or whether it involves an on-site scanner for the agent that scans checks at the agent's office and then has a shredding policy set up so that after a couple of months all those checks are shredded, that's an important security protection, not just for the HOA accounts but also for those individual checking accounts so that they don't get compromised. ACH preferred processing of member dues is always a more secure way to go rather than having things flying through the mail. And converting those checks to electronic where it's possible also is a major benefit and a reduction in fraud. Also, positive pay. Positive pay basically means that the management company or whoever's writing the checks uploads to the bank separately a list of all the checks and the amounts that they've written with the check numbers, and then the bank checks that and then looks at all the incoming checks that are being cashed. And they make sure that there aren't any checks being cashed that are not on the list. So that's called positive pay. And you're basically sending two bits of information to the bank. One is the list of the checks and the amounts, and the other is, as they come in, the actual check themselves from the vendor or the recipient of that check. And that positive pay system also helps flag unauthorized transactions and limits fraud. Bookkeepers and property managers should not have the same privileges. Bookkeepers should not be signing checks, nor actually should property managers. You want to make sure that the printers and the signers are separate. And that goes as well for the corporate bookkeeper as well. Typically, HOA companies, management companies will have a property management bookkeeper that helps with the PM side, but then they have a corporate bookkeeper that does the corporate audits, and it would be good to have a separation of power and authority between those two bookkeepers to make sure that one of them isn't having too much control, and then the duties are split between the two. I hope this information's been helpful for you. If you're looking for homeowner association management in the Kansas City area, feel free to give 33rd Company a call. We'd be happy to help you out. Thank you.